Hey everyone, hopefully you're having a good day. My name is Andy. My channel is Finding Value. I'm reading through the comments section. There's a couple of things that I wanted to address or talk about. Um, I wanted to talk about how when I shifted as an investor and basically started to make lots of money, or I should say lots of money per position. Um, I'll- I think the biggest problem that people have, there's a few things that I see um, amongst just random people. It's not about any in particular comment that was left, but this is just kind of in general. I was kind of thinking about it. If you're in the comment section and you made an investment, and let's say you're down on the investment, I don't get mad. I don't get sad. I don't have this emotional response. You know what I normally do? I usually buy a lot more. I mean, a lot more. I want to tell you a little bit about platinum. I noticed that the ratios were getting very cheap. I have a deep, I'll say, understanding and trust in ratios. Because what a ratio is, and I know it may sound complex to some people, is it's just saying that over time, if I were to look at a field of these things, a whole bunch of different assets in the world, how would you know what the cheapest asset is? And what you do, and this is exactly what I did when I was analyzing everything, is you start pricing them all against each other and then looking at history. If things were really cheap in history and then it hit this psychological kind of low or level, then you could say, well, it's cheap, but what's going to make it turn up? Um, in history, there's really sometimes no explanation. People put explanations to it. The demand went up, the supply went down, but most of the time, it's a combination of many transactions and people interacting with each other. It hits certain levels, and for whatever reasons there could be thousands or millions of reasons, it comes back up because substitutions are going to substitute the cheaper material in. People are going to find better uses for it, whatever it may be. So the ratios I got really comfortable using. And I think everyone would benefit getting very comfortable using ratios, understanding them. Because if you understand them and you know them, you're going to look at things from a different paradigm and perspective. It's not going to be, I'm down in my stock, therefore this is a bad investment. And some of these investments, they're so volatile that you could be down 40, 50% in like a heartbeat. Trust me, I have plenty of positions where I've tried to position very well. I've tried using technical analysis. You get caught in something and it's like hammer down. And what I usually do is I don't get discouraged. I look at it and I say, all right, are the conditions in place? Check. Is the ratio cheap? Check. And I go through all the check marks and say, this thing is still an incredible deal. And what I do is I literally, I load up. Like I make those positions in the beginning so insignificant that it doesn't even matter in my cost basis sometimes. So I was buying platinum. Platinum had all the ratios, and COVID hit. COVID smacked this thing down. It went in the 600s. In fact, I think I bought some for 630 something or 640 something like that. But they only limited me to 1 ounce. So rather than being down on my investment, I bought it at like 850, 900 dollars an ounce, somewhere in that range, 800s and 900s. I was cost averaging in, doing my thing, buying it at cheap ratios, platinum, physical platinum. This thing comes along, smacks it down, and I could have sat there and said, oh, I'm down 30, 40% or whatever it is. And I could have been, have my head down, moping around, um, thinking that I'm a victim of this COVID crash. But I didn't do that. What I did is I said, all right, this stuff is ultra cheap. I loaded up. I loaded up in the 600s and 700s and 800s as that thing came back up. I loaded into it. And I doubled to triple my physical position in platinum during when it was cheap. I did swap some metals into it as well. I swapped palladium for it and a little bit of gold. to really beef up my platinum position, because I am a huge believer in platinum over the 5 to 10 year, 20-year period, whatever it is, whatever period you want, basically. And what made me make more money is I didn't get afraid. I trusted the ratios, and I piled in at the right moment. I piled in when everyone else was going cuckoo land. So the way that you make money is you have to disconnect your emotions from yourself and from everyone else. And we've got all these YouTube channels there's a lot of people out there. They're giving all of their opinions. When I really started making like really, really good money, I didn't listen to anybody. I didn't listen to anyone on YouTube. I didn't listen to, I mean, I'd listen to them for entertainment purposes, just because I like listening to and getting other viewpoints. But it's when I just said, I am going and trusting this stuff. Like, I have to trust it. It's logical. It makes sense. And I go for it. And then you got to get a little bit less emotional with the money that you've earned. You got to have a little bit of like, you know what? If I don't go for it, then what's going to change my life? So I have a little bit of that in me too. A little bit of that, that I don't give a crap, type mentality. I mean, I do care, but you kind of have to, it's like, I'm going for it. Doesn't matter. I've created this strategy. It's going to work. And then I diversify out, my strategy. It's not just one strategy. I don't go all in on one thing. I diversify it out. I've got stocks. I've got physical metals. I've got different strategies for different things. And that's how you reduce your risk. And really your risk is more of just time. It's not necessarily losses, because you can go down, but if you're right and it's cheap, then it's just a matter of time. So if you have to change yourself and your time frame to be patient. I've been buying silver for many, many years, many years. During the COVID crash, after the crash happened, there were some people who were scared. They wanted to sell out of their silver. The premiums went way up, and they were going to give me spot price. It was like 1675, maybe it was 17 something. I don't know, whatever it was at the time. They said, "Here, you want all this metal?" And I said, "Yeah, I'll take it off you. How about spot price?" And I'm like, "Yeah, I'll take it all." And the ratio is what gave me the confidence, and me doing this over and over. And it is so important to be buying when everyone else is not buying. You can't be part of the herd. It just doesn't pay out. So you're going to have something inside of you that is it basically is going to go against everyone, and it's really hard to do for most people. For me, it comes natural now. It's like, I don't care. This guy could. A lot of people, what they do is they'll post other people and they'll say, "This guy says it's going to go down," and this guy says it's going to go down. Honestly, I don't really care what they say. It does not even faze me. That's great that they think it's going to go down. I don't really care. I'm going to buy it no matter what. You could tell me that I'm stupid for buying platinum. It's in a downtrend, and what I'm going to do is I'm going to wait until it goes down and then come back up and start buying some more. And you know what? I don't really care. Does not matter what people think. I'm going to do it irrespective, because I think the ratio is right. I think this stuff's ultra rare. I think the inventory is very low. I like it. So that's where I'm going. I'm putting, some money there. And that's not an advice, guys. I'm just telling you kind of my mindset. And that's really what I think a lot of people have to work on. But there was another thing that I was reading. And I was reading, I can't remember what it was. This person was saying that something was going to go up or down. And then I read below it, and they're like, "You're wrong. It's this. You said, you said XYZ. If you're doing that, you're taking no responsibility for yourself. There's no responsibility there. what you need to do is you gotta, if you want to get better, if you want to win at this game of making money, you have to develop yourself. You have to set the mindset. You have to set strategies. You have to do things to get better. You have to work at it. This isn't, you're not going to get rich by listening to other people and then just doing exactly what they tell you to do. You can't be a robot and make a lot of money. You're going to have to know when to buy. You're going to have to know when to sell. You're going to have the confidence in your investments to hold on. You can't make a lot of money by listening to other people nonstop. Like, I understand it. You're probably listening to all these different people on YouTube all over the place, and you're trying to find answers. I understand that. I did the same thing when I was younger. At some point, you're going to have to sit down and literally start piecing it together yourself. And once you do that, you're going to change yourself, because everything else just doesn't matter. It literally does not matter. When you see how things interact with each other, and you piece together the puzzle, then it's like, for me, the technical analysis, as long as the trend is down and it's broken, I'm game on. I don't even care what the short term does. And there's people who they measure their happiness, they measure their, how can I say it? It's not just happiness, but they verify that their thesis is 100% correct on the short-term movements of whatever the sector or stock or whatever it is. And your time frame has to be correct, because if your time frame, it should not be measured in weeks. Pullbacks and consolidations last 6 months to a year to 2 years, and then a massive move comes. So you have to really change yourself and look at things from a year or multi-year perspective, and look at what the underlying conditions are that are ripe for growing the seeds that you want to be growing. You have to make sure that the soil conditions are right for the stuff that you want to grow. You can't do it if the conditions aren't right. They're not going to grow. And then you keep watering it, and you keep refining your investment strategies. It's about refining things over time. It's about getting better. If you start blaming other people for whatever reason it is, doesn't matter what it is, you're not going to get better. You got to get better yourself and take full responsibility for your actions. If something goes wrong, figure out why. And I did that. I did that for many, many years. And what I found with myself and what I was doing wrong is my time frame was not right. I was way too short. Weeks, 6 weeks, 8 weeks, 10 weeks, 2 months, far too short. Far, far too short. You need to be thinking 5 years, 10 years, 15 years. It's got to match the real estate cycle. Because that's where I was getting messed up. I was getting torn up. And what you're going to do is you're going to buy things, you're going to look 6 weeks out, and you're saying, this investment doesn't work. And what you're going to find out is that every investment doesn't work for you because your time frame's too short. You're going to look at it, and it's going to go down, and you're going to say, I'm scared, I don't know what I have, it's going down, therefore it's bad, sell it. And then you're going to do it again, it goes down, it's too bad, it's bad, therefore sell it. And in the short run, these things are volatile, especially, if you can't read charts very well, you could buy at some really bad times because you're going to be susceptible to emotions overrunning your logic. And you may think it's a good spot to buy, and it just isn't. You don't recognize the patterns. There's a whole bunch of different things that can go wrong. But if in order to get really good at investing, you have to disconnect your emotions and say, get out of here. I can't listen to you. You have to remain calm, and you got to have that attitude that just, it's like, I don't care if this goes up or down. It doesn't really matter. You got to look at it and say, it's down, buy the living crap. Buy it. Just keep buying. And when it goes up, that's when you are like, hey, you know what? This is going up. I'm going to hold off. When it's down, you buy. When it goes up, you relax. Because if the valuations are so good, you just hold on. And that's when you really start making money. And you start making a ton of money when you don't sell very often. You kind of just accumulate everything that's cheap and then let it go. You could probably never sell. And in some of these companies, not commodities, but in other companies that aren't cyclical, and you just never sell it, and you just accumulate assets all over the place. You accumulate real estate, never sell it. Accumulate physical metals, never sell it. If you accumulate things that are long-term stores of value and never sell them, you're going to do very well over the long period of time. Accumulating assets when they're cheap and then figuring out how to value assets is massive. It is massive. Do your benchmarking in real estate. Go find some real estate. Pick some up. Get some renters in there that can, like if you're 20-something years old, maybe you have a room, rent the other rooms to everybody and have them pay your mortgage off. Do what's smart. Loans are cheap right now in terms of interest rates, and houses are getting tough to get. But that's kind of the turning point that I had. And everything I did, I put zero blame on anyone but myself. I looked in the mirror. I looked at what my actions were. I looked at what my mistakes were. And I said, no, I'm not going to do that again. And then it cuts you a little bit. You get a little bit of a cut. You lose a little bit of money. You lose a little bit of money. It's like, all right, I'm sick of getting these cuts. How can I make more money? And what you're going to realize is that you're always going to get cuts. You can't eliminate the cuts. Things will always happen. You're going to get cut. You're going to make a bad decision, cut. But it's you're trying and you're testing the limits. And some of it, these things don't come around enough where you get a lot of experience to do it. So you're really relying on things that you've back tested in history. Because I haven't gone through a lot of these, bull markets and commodities. I've seen the back half of one, and everything else is researched and read, read about and compared to and graphs and charts and all sorts of stuff. So I guess walking away from this, what do I want you to know? You got to get your time frame right. Your time frame of weeks and months is too short. You need to start looking at 5 years and 10 years. You got to stop blaming other people. You have to take responsibility for your own actions, and you need to refine your strategies if you want to win. What I've found in my own problems with my strategies is I didn't have a long enough time frame. I accumulate for years when it's down, and then I ride this big boy way up. That's my strategy. I had to lengthen my time frame quite a bit. I was way off. And it feels good getting a 20% increase. Well, what about 1,000%? What about 4,000%? What about 10,000 or 20,000 or 50,000%? You can't get 20,000% gains unless you're buying at bottoms. You need to have the courage, you need to have the know-how in order to do that. And that's what I set I gave my own goals and my own. I wanted to have some 40 baggers and 50 baggers and stuff like that. You're going to have to buy at bottoms, and you're going to have to be different. Being the same as everyone else isn't going to get you where you want to be. You're going to have to step out where it's a little bit fearful out there. You're going to have to do some stuff that you're not used to doing. And I'm not telling you to go crazy. I'm not saying that. What I'm telling you is it's going to feel a little bit wrong if you've never done something before. You're going to be a little bit more timid, but try it with, try different things with a little bit of money, see how it works out for you. Learn, remember, and if something cuts you bad, don't do it again, or try a little bit different approach. Always try to continually refine yourself. And what you're going to do is the better investor you become, you're actually going to change yourself for the better, just as a person as well. You're going to be a lot more disciplined. Believe me. You're going to be a lot more patient too. So I just wanted to talk about that. I saw a lot of comments going through here, and I wanted to touch on all those things. hopefully this helps you become a little bit better investor. Give me a thumbs up if you like the content. Let me know what you guys need to work on below. Love to hear your guys' comments. And thank you for listening. This is Finding Value.